Welcome everybody. This is the Thursday evening, March 7th webinar. Tonight's topic is a favorite of everybody's, range-bound trading. Make it your friend. So hopefully we can dispel all the range haters out there and bring some into the fold. But first we got to get our standard disclaimer out of the way. So let's knock this puppy out and get this baby going. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade, at your own sole discretion. My apologies, excuse me, everybody. I gotta have a sip of coffee and wake up here. Say hello to my little friend. Let's get over here to screen one where I have a nice, happy ES chart awaiting. Now, if we're going to talk about range-bound trading, first of all, we have to all kind of get on the same page as far as what a range is. So let's do a little exercise together and see if we can all get some consensus as to what is a range and what isn't a range. Let's start with what isn't a range. Let me do it this way. Okay, I'm going to put a line on this chart, a vertical line, right about here. Now, everybody to the left of this line is ES trending T or range-bound R. I'm talking about to the left of this line. So that would be this price action right here. What say you, team? T for trending, R for range-bound. We're trying to all get on the same page for what a range-bound market is. We'll give you 5 seconds for each of these questions. T for trending, time's almost up. To the extent you participate in these, I try to make these webinars as interactive as possible. If you can interact with us, you're going to learn a lot more. Trust me when I say that. But if you don't feel like answering, that's cool too. No problem. 2 seconds. Trending T, range-bound R. Time's up. Trending. So the definitions of a trend are a series of lower highs and lower lows, or higher lows and higher highs. So we can clearly see that this market was trending. Now, I'm not going to talk about trades just yet, right? There's the downtrend line. You can see that it was very much in a downtrend. This to orient you, everybody, if you're brand new, let me just back up for a second here. I am here in California. This is all Pacific time. You are looking at a data feed on the E-mini S&P futures, ES. All the equities are for another week or so on the, or no, I think we roll them tomorrow to the March contract. I mean, to the from the March contract to the June contract. So this is about to expire. We'll roll that tomorrow. And so, you know, we try our best to identify whether a market's trending up or down. All what you see here is what's called the Viper indicators. This is a 4-range chart, so we have a data feed connected to our broker NinjaTrader. And our indicators are the background colors, bar colors, swing levels, power meters, predictors, and of course the bands. The mid band is in the middle, the thick band right here, and then you have 4 bands below it and 4 bands above it. And we have quite extensive, literally hundreds of hours of teaching on how to trade markets when they're trending. And we don't really talk too much about ranges. Most people don't like ranges too much but range-bound trading is a part of the market. And so what we're going to do here tonight is we're going to look at both trends, and we're going to spend some time on ranges, on how to, at first, quickly identify a range. That's obviously the first step, because if you don't know you're in a range, how you can't trade it. That's obvious, right? And then what kinds of ranges can you trade, and how might you go about doing that? Now let's move forward to the right of this line. So now we're looking over here, this direction. From here to here. Would you say that the market is trending or range bound? T for trending, R for range bound. 5 seconds on the clock. Now we're looking to the right. So the cutoff is at 724. All the way till almost 11 o'clock to the right. What say you, team? 4 seconds. Trending or range bound to the right. Now we're looking over here. Two seconds. T for trending, R for range bound. It's a little bit of a trick question. There you go. Okay, I see some mixed comments coming in. That's good. That's good. It's not really a trick question, but you're going to see in a minute what I'm talking about. All right, time's up. Now, this is what we would call, sometimes I see there was a mix of T's and a mix of R's, and some of you put in sideways to up. Mario, Lewis, Chandra, several of you put in a comment sideways to up. Now, excuse me, here's how we interpret this. A market, sometimes, and this is a good example of it, a market can be going sideways in a true sense, but still be somewhat in a trending mode. I know that's really contradictory, but let me just explain it this way. Here you can see that you had broken the swings to the upside and the background changed to green. And so you can clearly see here that you were starting to get a series of higher lows and higher highs. So by that definition, you are starting to go into an uptrend, yes? And so the definition of entry on an uptrend is that you are buying support, taking profit, buying support, taking profit. Now, in some cases, if you contrast a move down like this, which is about a very powerful thrust trending, pushing downward, and then you look at the opposite of that, which looks more something like this. So the correct answer here, and this is perfectly acceptable, is sideways to up, meaning that there are ranges here. Yes, I think everybody saw them. Most of you put R's in, and that's good. But it was sideways to up. So in the case of this, your primary mode of entry is to take long trades at the bottom of the range. Now, if I'd put these lines in before you looked at it, it would have been obvious. And then coupled with the green background and the blue bars and the stair steps, it would be pretty clear that you were sideways to up and you're still buying long from support. Everybody see that? Let me look at some other examples. Let's look at some other examples. I really want everybody to sort of get a really good feeling for this. Because if you're going to trade ES, and a lot of you do, you're going to have to learn to deal with ranges. Okay? A lot. In fact, in the old days, most of what ES did most of the day was ranges. So if you weren't able to trade it, you were just kind of SOL for the day. You know what I'm saying? All right? Okay. All right. So let's go back here to, what's today, the 5th? Let's go back a couple of days and look at the day of the 5th. Ready? Now I want you to type in 5 seconds on the clock. when I show you this, was this particular day trending or range bound? Ready? Here we go. This is the day of the 5th, March 5th. T for trending, R for range bound. What say you, team? T for trending, R for range bound. What do you think? Some of you are typing in ugly. Ugly, ugly. 2 uglies. A double. We got 3 uglies in here. Any of you remember this morning? I do. I remember this morning really well. All right. Time's almost up. All right. Time's up. Definitely range bound. Now, let me ask you this. How would you know ahead of time that you were in a range? That's right, Hardy. Candy stripe background gives you a clear indication. There's a lot of, I'll go through all of the telltale clues of what would indicate to you that you are in a range. Let's recreate the open of this trading day at 6:30 and see how we could have dealt with this, okay? Let's go back here. 6:30 would have been right here. No, that's 6:54. 6:40, 6:30. Okay, so this is coming. This is the open right over here. Now, what is the first way and the most optimal way that we can tell that? What is the first thing we have to do if we're going to determine if a market's in a range for the day? There's something that we do early in the morning when the market, before it opens, to prepare ourselves for the day. What do we got to do? What's the first thing we got to do to prepare ourselves for whether a market's going up or down, or we may be range bound for the day? There's something we do. That's right. Support and resistance lines. All right. Tell you what we're going to do. Here's what we're going to do. I'm going to put let's play a little fun game so we can do this together, okay? I'm going to put a line on the chart, and when you think I should stop, you type in S for stop. I'm going to start with the line down here, and I'm going to raise it up, and tell me when you think that there is a line that should be put on the chart. Ready? You're going to type in an S when you think I should start. I'm going to start moving it up right now. Here we go. All right, we didn't do so good on that one. Does everybody? Let me back up for a second and see if we can sort of get all on the same page. Does everybody understand the concept of support and resistance and where swings are? Does anybody not know that? What that is? Does anybody need a quick explanation of what that is? Support and resistance and where to put your lines on the chart? Yes? Yes? That was a little fast. Okay, sorry about that. All right, so here, let me give you a very quick tip on how to do this. This is really, you wanted to put in a stop, but I kept moving it. Okay, sorry about that. Maybe that wasn't the best exercise. Let me tell you how the main way that I do it in the morning to get ready for the morning. Okay, so I start wherever the chart is. Let's suppose I'm looking over here, and the market's just getting ready to open, 6:30 Pacific. And I'm trying to decide what's going on with this market. So you try to look for extreme swings at the top and the bottom to put your first lines. Okay? So we can see here that in the pre-market session, here's midnight on the 5th right here, that in that European session in the first couple hours, ES peaked out and pulled back right over here. Now, would we all agree that that would be a resistance swing right there? What do you think? Yes? Yes or no? Should we put a line here? Would that be our first line at resistance? What do you think? Yes. Okay, good, good. Now, as we move closer to the open of the market at 6:30 in the late hours of the European session, we put in a couple other swings kind of right around line 6 right here. Can you see them? See how they're right here? Now that is below here. So might we want to put another intermediate resistance line somewhere in here? What do you think? Would that be a place to put it for excuse me, resistance? Maybe right somewhere in there. What do you think? Yes? Okay, good. Now, remember we said the first thing we do when we look back at support and resistance is we look for the extremes, right? So what would be an extreme swing that we might want to put a line at? Let me give you 3 choices. Okay? A, this is the extreme swing. B, or C. We're putting support lines in now. We already did our resistance. Resistance is up here. We already did that, right? Okay, where will we put the support? Would it be A, B, or C for our extreme support line? We'll give you 6 seconds on this one. Extreme swing. Located A here, B here, C over here. 4 seconds left. Cast your vote, A, B, or C. 2 seconds. Let's say you team. All right, time's up. So when we talk about extreme support and resistance, what we're talking about is the outlier case. So, excuse me. Let me take a quick sip of tea here. Hold on. All right. Now, let me put it this way. No, it's not A or B, it's C. Which of these points is furthest away from the midband? Let's do it that way. This one, or this one. Which is the furthest away from the current location of the price in the midband right here? Which is the furthest away? This one, C. This was A, remember? This was B, and this was C. Okay? Yeah, now you can clearly see that the extreme swing for support was out here. Right? So the correct answer was C. Good, most of you got that. Now, would it be possible, should there be another support swing somewhere located between A and B, perhaps in here? Much like you had here. So you have 2 levels of resistance, yes? And you have 2 levels of support, right? See it? Now, what is the saying that we say? We say this. For those of you that might be new, maybe you haven't heard this before, but we make the case that if the price action for a futures instrument remains within the confines of these lines, we are said to be what? If the market stays within the confines of the pre-market lines, it is said to be what? What's our saying? What do we call this? We have a name for it. It's said to be in the range. It's range bound. Exactly. So now the market is just opening at 6:30, and what do we have already on our chart? We have support and resistance lines clearly defined. We know ahead of time, excuse me, I get this question all the time. Well, it's always easy to do it after the fact, Charles. You know, you can look back and say, oh, there was a range, oh, it was trending, it was going up, should have bought here, and blah, blah, blah. Well, I mean, the market hasn't opened yet. I mean, we're literally right at the open. This is within like 4, 5, 6, 8, 10 minutes of the open. This is 6:30, 6:40. And there was nothing preventing us from putting these support resistance lines on ahead of the market open. Yes? Now let's advance the chart, and you tell me when you think it's broken out of the range that we have identified here. Ready? I'm going to advance the whole day. You type in a B, signifying that you think it's broken out. Ready? Here we go. Seven o'clock. 7:11. 7:28. 7:42. 8:26. 9:25. 10 o'clock. 10:30. 11 o'clock. And there's the close of the market. Now, there was a little bit of a fake out here. Yeah, it was total chop. But what can you notice that we did over here at 6:30? Let me put the line at 6:30 where we drew our support and resistance lines. Let me ask the question a different way. If you were going to trade this day, and some of you might have not even traded it at all, and if I recall, I think I took 1 or 2 trades. I didn't really do much this day. It was really too choppy for me. Wouldn't you say it was much easier to see that it was sideways with those lines that you put in there in the pre-market session? Didn't that make all the difference in the world to see this? Wouldn't it have been much harder if I took these away to see that it was choppino? Yeah, oh yeah, heck yeah, definitely. I mean, some of you, when I first showed this chart, said it was ugly and choppy, so you immediately knew. But you have to admit the lines help a lot. Some of you, excuse me, still fighting this cold. God, it's going on 3 weeks. I'm taking meds too. Sorry about the cough, everybody. Some of you typed in a B here. Now, let's circle back and discuss this very quickly. Looking back, knowing what you know now. Yeah, no, Lewis, you didn't see a break and you didn't type in a B. I see that. Is this really a B? Yes or no? This one right here. How about these ones right here? How about right here where it's poking through support? Are those Bs? Is that breakouts? Is it breaking out of the range there? What do you think? Yes, are these breaks? Are these breakouts to the downside? If you typed in no, you're right. In order for this to be a breakdown out of the range, it would have need to do something like this. You get a thrust down through support. It could be shallow. It could be shallow like that. It could have been even deeper, like down into here. Then what would happen? There would have to be follow through, right? Wouldn't you have to get something along these lines where it comes back up and checks a resistance level again, like that, kisses it and rolls over? Would that be a bona fide breakout down to the downside if it did that? What do you think? Yes. So in order for you to have bona fide breakouts, it has to exhibit some kind of pattern like this, where it's broken, you get confirmation of a lower swing high on resistance, and then it breaks to the downside. Conversely, that would be the reverse on the upside. It would break up, it would pull back, and then... So you notice in the room we'll say a lot, like, you get this question a lot, like, are you going to take the breakout? And we always say, well, no, we're going to wait for it to break, pull back, whether it's long or short, right, to a support level, and then see what it does and take it from there. Now, there are cases where it breaks and runs. It goes 40 ticks and you miss it. There's hardly any pullback and you miss it. That happens. Okay? That's just going to happen. But the safer approach is to wait for this to occur right here. Okay? Everybody see that? Good. Now, second part of the question. Was this range tradable? Yes or no, in your opinion? The daily range. And I'm going to help you with that question because I'm going to give you some sizes of the range. You had support here approximately at 86, and resistance at this first level was located at 90.50. So 86 to 90.50 is 4 times 4, approximately between 18 to 19 ticks between here and here. 18 to 19 ticks. And between 90.50 and 96, this range right here was 6 times 4, approximately 20 to 24 ticks. You could take the trade at the kiss and roll, Mario. Yes. Hypothetically, on this break. Yeah. So here we were like 18, 19 from here to here, and approximately 20 to 24 in this area right here. Was the range tradable for ES on this particular day? Yeah, you would have to put a box or something up here and look for a kiss and roll on this hypothetical short with an extremely tight stop above the line. I did take a couple this morning. I think I did, yes. I can't recall exactly what they were. But so this is our rule of thumb, everybody, is if the range is 20 to 25 ticks is our bare bones minimum. And here's why. You have to come in, you have to fade a swing level to get in and out. In other words, when you go to buy in a range or sell in a range, you never put the order right on the exact area itself. So let's do it this way. Let's suppose in this particular area here, you're trading both sides. So I'm going to draw a little box around this like such. So when you're looking at ranges, you have to identify your opportunity zones at support and resistance like such, because they're really, we put a line here because we have, it's easier to refer to a number and say 85.25 versus, oh, I would put a box down here between, 86 and 85 or whatever. But it's technically speaking really an area. That's the more healthy way to think about support and resistance. It's an area. It's not a line. Now that being said, where do we put a, if I said to you, in order to get in at the top and bottom of a range to trade it, and you would fade it, what does that mean? I see support is down there, right around that 85.25. If you want to buy down there at the bottom of the range, you want to fade that. What does that mean? Let's say 5 ticks. You want to fade that. You want to fade that area by 4 or 5 ticks to get in. What am I talking about? Fading. What is that? Is that like putting shades on your window or something? You want to try to protect against the sun? What am I talking about? Fading. If you want to get out of that trade at the top of the range at 90.50, you want to fade that by 4 or 5 ticks. So where does your orders go? What does that mean? Well, fading means that you come. Well, no, it doesn't mean it doesn't bite you. Let me explain here. The term fading means that you come within a certain amount of ticks above or below the line that you are referring to, whether it's support or resistance. So let's do an example of the buys at the bottom of the range. Let's suppose you wanted to come within 4 ticks of here to put buy orders in. Yeah, so it would be ahead of the line. That's right, Byron. All right. So 5 ticks above 85.25, or 4 ticks would be 86.25. So you could be looking to buy here right around line 2 to get in. This would be buying. Yes? Now, if you want to come 4 ticks under 90.50, you would have sell orders located where? 4 ticks under here would be 89.50. So that'd be like right in here. Right around the mid-band would be your sell orders, yes? Likewise over here. So if you're going to look at this range over here, you have resistance up in this area right here. So if you're going to take profit or sell from a long trade or look to possibly short, you would fade, your orders would come within, 4 or 5 ticks of that level right in here. And your buy orders would be somewhere down in here. More or less down in this area right here on your range. Maybe fading that line by a few ticks. So you would felt heat on this one. So this is the meat of the trade, right? Up and down. This is the meat of the trade. The meat of the trade goes down. Here, let me actually show it where. Let me just show you how much you're looking at. And this is why you can see there's not a lot of meat on the bone here, right? There's not a whole lot of meat on the bone. What I'm talking about is the profit potential on this trade is between 86 and a quarter, 89 and 3/4. 3 times 4 is 12, plus 2 is 14. But you got slippage in here, maybe a tick each way, and you're paying commission. So you might net 10 ticks in here. Slippage is the tick between this bid and the ask you have to pay to get in and out, right? So you got slippage, and then you have to pay commissions. So the net inside of here is probably less than, at maybe 10 ticks. But, it adds up. You got 10, 10, 10, 10, maybe you got 3 or 4 10 tickers in here, and then maybe you stop down on this one. Maybe you were taking a short here and you took a pop, so that takes some away. And you got a couple more 10 tickers. Over here, you're looking at 90 and 3/4 to 95. So this range is a little bigger. You could potentially get as much as maybe 18 ticks in this one, right? Is that right? 90, 50 up to 4 times 16 plus 1. No, more like 17 ticks. A little bit more, not much. Less slippage and commission, of course. So what you have to do, so what's the end of this story? What does this all mean? Let's pull it together. Do you think, in your opinion, and this is an individual question for each of you, looking at these two ranges, it's worth the risk of getting in and out to get 10 ticks in here? Yes or no? If given this opportunity again at some point in the future, hypothetically tomorrow morning or Monday morning or sometime next week, you get another range that looks like this or a range that looks like this, the bottom line, if you see it with your lines, would you trade it, yes or no? Knowing what you know now. That's a fair question. Would you be happy scalping 10 ticks a couple of times if that's all you could get in the morning? Or would you prefer to stand down and avoid it altogether? That's a personal question. Everybody's going to answer that a little bit differently. Mario says not for me. David H. says no. Louis says I might, considering the instrument, what instrument it was on. Mindy says no. A couple of pops would negate any kind of wins that I might have. Mario, that is correct. That is right. And what I mean by that is that if you're trading both sides, meaning that you're getting long down here, and then you're taking profit at basically you're buying and selling, right? You're buying, you're selling, you're buying, you're buying, you're selling. You're shorting the top and buying the bottom. Well, and this is an important takeaway from this range-bound trading situation. If you're trading both sides, when the market breaks, either way, like it did here, and you got short here, you took a pop on the last trade. Now, depending on how large your stop was, that would negate some of the 10 tickers you got in there. So that is the risk. You have to know that at some point it's going to break out. And if you're trading both sides, in this case, this trade here would have been a stop out right here on the short. Everybody sees that? Put tighter stops? You could put tighter stops. You don't have to put a 12-tick stop on that. You could go as high as right. You could just pop a quick stop right above the swing right here. So your risk is really much smaller. You wouldn't take a full 12 ticks, which would negate at least one of the trades, right? So let's say hypothetically your fill was 89.50 short, plus or minus a tick, and you popped out here at 90 3/4. What did I say that was? 89.50, 89.50, 90.50 to 90 3/4. So that's 5 ticks. Hardy says that's not good for me. Chopino is a lesson I continue to learn, says Hardy. I don't trade ES. Given the time of the day and the trend line you'd look at, Yeah, that's another approach. You could leverage up on it, Raymond, and go for less ticks. Some people do that. They're just looking for a few ticks on ES, and they'll put more contracts, 10 or more. If you have the leverage power, that's the key there, of course. All right, let's get off of ES here. We've sucked a lot of time into it. Who wants to see crude? Any crudey traders here? Want to see a crude chart? Oh yeah, get that crude chart in here. What are you waiting for? Let's get some crudey trades set up here. Oh, yon. Put the onion on the Cajun onion spice. All right, you want the crude? You're going to get the crude. All right, here we go. A lot of you trade crude, I know. That's cool. Let's look at some crude. Let's do another quick exercise. And then we'll Texas tea. Texas tea. Crudy crude, good for you. Let's do a series of exercises where I'm going to ask some questions, and I'm going to do it rapid fire. So in other words, you're going to have to pop, like literally 3 seconds. You're going to get 3 seconds to answer the range bound versus trend question. You're going to have to react quick. So you're going to hit a T, boop, or an R, boop. Are you ready to start looking at crude? We're going to do this real quick, and then we're going to look at trade setups. Okay, you ready? Here we go. First question. This area right here, R range bound, T trend. 3 seconds. 2 seconds. You should instantly know when you look at these now. That's our exercise right here, okay? 1 second. Range bound or trending. This box. Time's up. Range bound. Ready? Here comes the next one. How about from here to here? Range bound or trending? 3 seconds. From here, this was inventory day, by the way. From here at the end of the box to the beginning of inventory right here. You see the shotgun. 7:30. This was all 7:30 bars. 2 seconds. T or an R. It's one or the other. 1 second. Time's up. T. T for trending. Lower highs and lower lows. Now, of course, you might make the case, I can see it, where you might say, well, Charles, it was kind of sideways in here. And I would agree with you. But was it sideways to down? I kind of gave you a clue. I drew a downtrend line. I tried to help you there, right? This was trending. Look, you had a thrust, retrace. These were short trades. Short trade, kiss and roll short trade, short, all the way into inventory. Good. Most of you got that. Okay, let's moving on. Okay, I want to make some of these a little tougher. Are you ready? Here we go. This area right here, I'm going to draw a box. Trending or range bound? T or an R, 3 seconds. 2 seconds. T or an R. Just boop. Just hit the letter. Don't even think about it. Just hit, react. That's what we want to do. You want to get quick, where you just react. You don't think. It's in your subconscious. You see something, boom, you know what it is. T or an R in that box. 1 second. Time's up. Range bound. Yeah, you can see that we're going through a series of, now you could make the case, well, you had a push up here, you went sideways here, and then a push down here. True. But it's not, let's contrast this area. Let's do another exercise, 3 seconds on the clock, from here to here, and from here to here. T or an R, 3 seconds. Those two arrows, are they T's or are they R's? Just hit the letter. You should know. Instantly look at it. 2 seconds. T or an R, trending or range bound, trending or range bound. Those two lines. 1 second. Time's almost up. Time's up. Trends. T, 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 T. How can we know that this is trending on the left? What are the clues? Are there higher highs and higher lows? Is the background green? Is the market moving up? Yes. Right? How about here where the market is red? The background is red, the bars are red. It's putting in lower highs and lower lows. It's kissing the midband and rolling. It's retracing. Is this two trends, up and down? Yes. A T and a T. R here. Let's look at it all together. R here, R here. T here. Down. Yes? Ahead of inventory. Most of you are doing pretty good. A couple of you are still missing it a little bit. All right, let's do one or two more, and then we're going to move on to the trade setups. Let me get some more data on the chart. Stand by. Give me 1 second here. I need more data. Need more input. Need more input. Not disassemble. 5 is alive. Okay, bonus points. What movie is that from? What movie is that quote from? Not disassemble. 5 is alive. That's the quote from a movie. Anybody know what it is? Not disassemble. 5 is alive. Come on, some of you have seen that movie. I know you have. I'll give you a minute to think about it. Anybody got it? The rain is getting to him. That's right, Robert. Robert got it. Anybody else? Some of you are saying Wall-E. It's not Wall-E. It is a robot movie. I'll give you that, okay? Batteries not included? No. Short Circuit? No. Star Wars? Jungle Man? It was Johnny 5. That's right. They had a government computer that got loose, and it started to exhibit human tendencies. And the government tried to track it down, but they had this sort of odd group that adopted it, and they were going to take it apart. And that's one of the quotes from the movie. It's a funny movie, by the way, Johnny 5. It's old. It's probably 20 years old. Anyway, anywho, all right, ready? Here we go. Here we go. Here we go. Here we go. Next set of questions. I'm going to give a couple easy ones, and then we're going to wrap up with a couple hard ones, and then start popping trades up here. All right. This area right here, range bound or trending to the right? I'm talking specifically about right here. What say you, team? 3 seconds on the clock. And R for range, T for trend. 2 seconds. R for range, T for trend. Dip it in there real quick. 1 second on the clock. Hit that button. Time's up. Range. It's clearly a range. You have a set of lower highs. You have a set of almost equal. The way to tell, and there's a lot of telltales here, obviously. You know, your highs are all about the same. The mid band is flat, right? These are all breadcrumb clues that the market leaves behind for you, right? The highs and lows are roughly about the same. Striped shirt background, mid band flat. All the bands not going anywhere. This is all clues that you are in a range. All right? I'm going to do 2 more lines here and here. 2 T's or 2 R's? 1 R and 2 T's. 1 R, 1 T. 2 R's, 2 T's, a T and an R and a T. That's your options. 3 seconds. 2 T's, 2 R's, an R and a T, or a T and an R. That's your 4 options. 2 seconds. Hit the buttons. Cast your vote. Time's almost up. 1 second. Come on, you can get this. You're starting to see it. Everybody's getting these right. I'm really, really happy and impressed. Everybody's getting total gold stars tonight. Time's up. A T and a T. Here the trend was up. You are buying pullbacks to support, long, pullbacks to support long. Here we go. We break short. We come up. We kiss the midband. Roll short here, and then you could make the case that this was sideways to down. Good. Now, what day was this? Does this day look familiar? What say you, team? No, yeah, was the name of it, what was it, Eddie, was it the name Short Circuit? It was an 86 film. Oh, Johnny Five was the voice. That was I'm sorry, yeah, you're right. Johnny Five was the name of the robot. Yeah, you are correct, Ed. I had that incorrect. The name of the robot that said not disassemble was Johnny Five. That's the name of the robot. The actual movie was Short Circuit in 1986, and it had Ali Sheedy and yeah. So yeah, that was good. All right, so let's do this exercise here. I'm going to do another exercise for this morning. When you think you see a trade setup, I'm going to slowly advance the chart, recreating the price action from this morning. And you don't have to type in what I lose 5 points. Yeah, I get the bad star on that one. I remember it was Johnny Five, but that's the name of the robot. Okay, here we go. We're going to do an exercise together, recreating the price action of the morning. And when you think you see a trade, it can be long or short. You don't have to say exactly what it is. You don't just type in an S. Oh, no, I'm sorry, T. T for trade. Ready? Here we go. We're going to begin the exercise. Now, this is this morning at 5:37. So Gary's all within 18 minutes of opening the room. This is what the market looks like. Here we go. Remember, when you think you see a trade, you type in a T. Here we go. And if you think you know the direction of it, no, we haven't started yet, Michael. Hold on. Just hold on a second. We're going to start the exercise. If you think you know the direction, long or short, you can type in an L or an S. If you just want to call it as a trade, then just simply put a T. All right, here we're going to begin the exercise right now, 5:37. Just trust me, this is not a T right here, okay? We're starting. Here we go. 5:54. Gary is opening up the room within 1 minute, the live trading room with all the charts in it. $6:01. Crude pits are open. 6:03. You're 3 minutes into the crude pit open. 6:11. 6:14. 14 minutes into the crude pit open. Remember, you're looking for trades here. 6:31. Equity markets just getting opened up here. 6:30, 6:31. You're 30 minutes into the to the crude pit oil session. Okay, there's 6:30, 6:31, right on the button. Let's make the bars a little bit bigger so you can see them real good. 6:32, 6:33, 6:35, 6:37. All right, I'm going to stop it right there. Now, let's go back and look here. Some of you, and recreate what happened here, okay? Some of you typed in a T here when, and I'm assuming what you might be thinking when you looked at it at the time was that there was a box forming at the midband right here. And some of you started to type in T's when this happened right here. And that could have been an early short right at the pit open depending on how you looked at this, you would have had to here, let me go back and reconstruct this. At the time that this occurred, you have to admit that the way the market looked at that time was that overnight in the European and Asian sessions, you were clearly in a very powerful uptrend. So it's quite possible, reconstructing this, that if you'd drawn this box, you might have been anticipating a long trade. So you may or may not have had the short enabled. If you had both sides enabled, long and short, on a region box at the midband, right at the pit open, then it's quite possible you were filled short on the close of that bar right there. Now, you did feel a little heat, so here was your thrust, where it broke support just a little bit. This is kind of an ABC pattern. You did have a little pullback where it challenged just under the midband. There's your B, and your C is the follow through the downside, which actually turned out to be a pretty good trade right here. So some of you typed in T's here, and I would say you were correct. That was the first one. The box is a little big. I'll give you that, Mindy. And as I said here, at the time it occurs with the background green and the powerful uptrend, you might not have even enabled short. You might have had long only, thinking it was going to do that. And if that was the case, then you would have never been filled. Yeah, right. Absolutely. Okay, so let's advance it. Now, I do want to make a comment on this. Some of you started typing in T's down here. Now, looking back on that, was that the right thing to do? Do we want to get short after the thrust of a move in a trend direction? Do we want to get short on a thrust move in a trend direction? Do we ever want to really do that? Down here. So if you typed in T's down here, I have to circle back and tell you that was not correct. That's chasing the trade. The trade was up here. The trade was here. You have to look back, and this is really the challenge of trading, right? You are compelled to take it because as a person, you see the market moving in a downward direction, and you feel it's that whole FOMO thing, fear of missing out. You want to take the trade down here, but you have to patiently wait for a pullback. Now, as I continued to show the bars on crude, many of you typed in T's when these bars formed right here. Can you see how that you are very clearly sitting right on the midband? See it? So if you had taken a short down here, and you had a 12-tick stop, you would have been stopping out up here, right? Because you were getting in on the thrust. We don't want to do that. We want to avoid that, right? However, when you come back to the midband and kiss and roll over, this was the short entry right here. This unfortunate trader is just getting stopped out when the trade itself is actually setting up. That could have been, Michael. Yeah, that could have been. I don't know. In my view, it's gone too far for that. And it has, you got a series of red bars that are breaking support. The background is turned red. The bars are predominantly red. You have a red stealth, and the midband is starting to stair step down. These are all the characteristics of the beginning of a downtrend. This is the downtrend. See how you're getting a series of lower highs and lower lows, and you're breaking support, and you kiss and roll. That's gone too far, in my opinion, for that one, Michael. Okay? Yeah. We used to call that yellow bar probe. We did. We've had several names over the years for these trades. Mid-band retracement, yellow bar probe, deep retracement, shallow retracement, minimum criteria trades. They're all signifying the same things. So if you're just new to this, just keep in mind this. This is probably when you're looking in the room and you're hearing calls and what have you. Most of our trades, I'd say a very high percentage of our trades, occur in one of these three areas. They're going to be located at or around the midband, like such, like that trade right there. This is pretty much our go-to trade, and that's why you hear it a lot in the room. Yeah, thrust, retrace, thrust. That's right, Robert. Thrust, retrace, thrust. Thrust, retrace, thrust. On the way up, you see it too. Thrust, retrace, thrust. Pull back, minimum criteria trade for entry under line 6. thrust, pullback. This didn't work out, and then we changed direction, right? We changed direction. The other place we like to see them, long and short, is in and around line 6 and in and around line 2. So a really simple, easy way to pick up very quickly on our system and how it trades is to focus your trade entries in and around those 3 areas. In the case of the shorts, it would be above line 2. In the case of the shorts, it would be below line 6. This would be your deep retracement up in here, right? Deep retracement. Mid-band. In the case of the downtrend, you're looking for short rollovers, kiss and roll, short, like this one right here. In the case of long, you're looking for to buy and get long at pullbacks into support in and around the mid-band, like such. All right, I think that's a wrap. Do we have any final questions? I'm going to hit the stop record button.